Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another massive news week. We've got so much to get through. We're going to run through all the macro news and then have a look at the crypto headlines and finish off by looking at the charts. We do welcome 1,000 new subscribers again this week. I was only able to make 2 public videos this week. I've been very busy behind the scenes with a number of projects that we're working on, which you'll hear more about soon, as well as taking care of my grandpa who's a little bit unwell lately. For members, there's another video which I'm going to share with you in just a sec that you guys will get early access to, and for everyone else, I will let you check that one out tomorrow because there's some really cool news coming up with a project I've followed really closely that I really like, and I want to get that out to you as soon as possible. So we also welcome 83 new members this week into our premium area, and nearly up to 1,700 now. The Nuggets News family continues to grow. You guys get all the extra content, particularly on weeks like this when I'm busy. I'll make sure that you guys are a priority and you do get all my multiple daily updates and our research reports, which we're going to have a sneak preview of as well today. And finally, just a big thank you to our supporters. FTX have actually opened up in the US now. We're going to talk about some of that news, but FTX continues to be my preferred trading platform. They've also got gold and oil, which a lot of you have been asking about recently. They've got options as well as volatility tokens, so it's got everything for the very beginner all the way through to the advanced trader and their new quant zone area. We can design your own trading strategies if that's your thing. So guys, there's a link down below to get a double discount on fees, and there's also a sign up bonus for FTX US if you are in America. Right, let's get into the local news. And the big blunder this week was the Australian government getting this wrong to the tune of $60 billion in terms of how much the JobKeeper was going to cost them. Now, why this was so interesting was the media were picking this up, and a lot of people were suggesting that the money can be spent elsewhere. But this starts the discussion about, well, what is money? That money didn't exist before. It doesn't exist now. It's not sitting somewhere. And a lot of people just never make that connection. So interesting to see whether or not they do spend that, or it's just now money that is less of a debt that we otherwise would have had. Now, we're getting news that a lot of people that access their super early actually gambled it away, whether it's actual online gambling sites or investing. And that's something that we've seen all through the US as well. So look, were you one of those people? Did you buy some Bitcoin? We certainly saw in America that everyone got their $1,200. There's a huge spike in $1,200 Bitcoin purchases, believe it or not. This is a really cool site on apple.com, and it shows you the mobility trends. So using a lot of the tracking data and your Apple ID to show where people are driving, walking, and in transit, and how much we've rebounded from this recovery. So you can type in any country there. I've just got Australia, for example. And this is something to keep a look at about how much people are actually going back out and being active. And this is going to give us a good idea about when things do get back to baseline. $63 billion of commercial office loans have bankers worried. So just like all around the globe, commercial property and residential property, there's a lot of these big loans coming due. And this is where we're trying to push back some of these payments and mortgages, and particularly in the US, those commercial bonds, which are relied upon to get that yield. We're going to get to all that news in just a sec. So look, bankers are worried that they'll might not be able to avoid that big tsunami of debt because all this is coming due. And this is why they're doing everything they can at the moment to try and build that bridge and get us over this period, because they need this money to start flowing. Otherwise, the defaults are really going to pick up. So in the residential housing market, we're being told that property prices are still at record highs, even though volumes are really low. And now, mysteriously, the CoreLogic daily index has been pulled. They're not going to put that up anymore. So it's all well and good when things are going up, and as soon as it turns down, apparently they don't have enough data to maintain that index. This was a really good article about the RBA misreading the economic upheaval back in the 70s, and something similar happening now. So what they're talking about is the inflation. Now, once again, central bankers around the world are just saying we're never going to see inflation. We haven't had it in years of this money printing, and I fear that, look, they're going to print so much money and people are going to force them to do people's QE that we are going to get inflation of some degree, because they're just going to fight it. They are not going to let deflation happen and prices go down, debts, the debt and the default that would happen if we actually get deflation is just going to be catastrophic. So they can't allow that to happen. But the big news has really been these tensions between China and Australia. So China did whack 80% tariffs on Australian barley. They're talking about wine, iron ore. The threats are going back and forward at the moment, and Australia are really standing up to them. Just in the past 24 hours, we've actually seen Mike Pompeo in the US issue a stern warning to Victoria, which is a state in Australia for our overseas viewers. They've got a tight relationship here with China's Belt and Road Initiative, and they're saying that the US will simply disconnect Australia if it does affect America's telecommunications. So this is exactly what we've been talking about for years on the channel, that Australia's in this rock and a hard place where America is going to say, you've got to choose. And this is probably the first glimpses we've really had of them pressuring Australia to choose or say that we're going to turn our back on you. Now, Australia's not exactly cozying up to China or treading on eggshells. I thought this was kicking the bee's nest. If anything, Australian study finds that there's signs of human intervention in COVID-19. So look, more research is going to continue. We are going to find the answers about the DNA and what happened exactly here, and that is going to maybe have a huge effect on the decisions Australia is going to have to make, and the rest of the world as that push for a big investigation continues. So in the latest escalation, President Trump was on Twitter this week blaming China for mass worldwide killings due to COVID. So he is certainly not holding back at all, telling them that, they're incompetent and responsible for all these killings worldwide. So man, oh man, are things heating up. That war of words, as I say, and so far it hasn't been a hot war of any kind. It's been all on Twitter and this economic war. And a few of these news articles, which we're going to get to, is just clearly highlighting the economic warfare that's taking place. So Silicon Valley tech giants have been caught providing services to blacklisted Chinese security firms. So a lot of the US technology is being used by Chinese companies, and that's a huge part of their revenue a lot of the time. So if you say you can't work with the Chinese, well, that's a big hit to their profits. So then you've got Wall Street offside and shareholders. It's not as simple as it first sounds. Nothing like this has happened before. So China vowed to invest $1 trillion to overtake the US in tech. And that's really important for Australia because it's not in building bridges and skyscrapers and all that infrastructure, which we got that big tailwind boom from. This is tech. And Australia's probably not going to benefit from that anywhere near as much. Maybe a few rare earth metals, but it's that software side of things which China really want to overtake the US. Now, the NASDAQ has had to tighten their listing rules. So once again, America is saying we are restricting your access to the US capital markets. So this is what Marin Katusa and others have been talking about, where a lot of businesses and banks all around the world, they need access to US dollars to issue these loans and give credit to these businesses because they don't want to do a deal in yuan. They want US dollars. So you restrict that access to US dollars and US capital, makes it a lot harder for your businesses. And that's why China say, well, we'll do $1 trillion worth of yuan, to try and stimulate things in the Chinese tech sector. A Taiwanese company halting these orders for Huawei, and again, after the US tightens restrictions. So they're sort of saying to all their allies, you can't do business with China. They're really reliant on these chips. Second biggest customer under fire. So this is where things are getting very, very interesting. Another Chinese company here affected by these US sanctions because of the ties to Iran Air. So you've probably heard this story about how Iran wanted payment in gold from Venezuela for their gas. So not using the US dollar, different countries demanding payment in gold bars and actually using these aircraft to fly tons of gold home as payment. Really crazy stuff. Now, this is boiled over most obviously in Hong Kong. So we saw during the week a bit of a coup, an overthrow. It's the end of Hong Kong as we know it, as the headline is saying here. So China Congress really cracking down this national security law, abandoning their GDP targets. So China haven't actually put out any targets for how quickly they want to grow at the moment because there's still so much uncertainty. And sure enough, this is video footage of that coup that happened in Hong Kong on Monday. So security guards dragging pro-democracy lawmakers out of that legislation room to vote, basically to get their way here. And this is why we're seeing a lot of protests in China. And Kyle Bass, look, I know some people love Kyle and some people don't like him so much with his stance on China, but all eyes are on Hong Kong because it's so important in terms of a business center, a relationship between the West and the Chinese in terms of the people and the business. So yeah, whatever happens there is possibly a sign of what's going to happen elsewhere. Now, Japan, their exports are now the worst since the financial crisis. Korea, another one, getting really poor data. So these are some of the front runners in the supply chain with the semiconductors. They've got strong tech-based economies that the rest of the world are relying on to import goods. And one of my favorite documentaries that's made a bit of a resurgence lately, and each week in the group we do our favorite bit of content that we've shared. This was the one that I suggest for members watch, and I guess all of you guys, if you haven't seen The Princes of the Yen, watch it. It's the truth about what happened in Japan, and they're a couple of decades ahead of everyone else in terms of what happened with 0% interest rates, money printing, and then what happened next, basically. So if you haven't seen Princes of the Yen, check it out because it's basically what is happening now everywhere else in these developed nations. But despite all this, Japan have dropped back into recession, and worse times lay ahead. I just spoke about those numbers. So why are we trying to do what Japan have done for 20 years if it hasn't worked? And that is the big question that you ask a central banker or an elected official, and they can't tell you an answer. And it's because they're just doing what their models tell them works, and their models are basically wrong, as Steve Keen and a lot of other economists talk about. So here's the data from different US consumer spending categories, and we still see some that are really hurting. Obviously, people aren't going out to movie theaters or anywhere with crowded populations at the moment. So we're waiting to see which of these sectors bounces back first, and if it's actually going to get to that point of pre-COVID in terms of its recovery. And I don't think some things ever will, or at least for a couple of years, and that's maybe where the stock market's getting a little bit excited. Now, in terms of preventative therapies, we actually saw that Trump stated he was taking hydroxychloroquine this week, but a new study came out showing that actually raised the risk of death, and this is where we need more studies and wider studies, and why I said during the week, and a lot of people didn't like what I shared, but look, drugs can have side effects, and even the less common side effects. One of the less common but possible side effects of this drug is paranoia. And I've seen very normal, healthy people take medications and get really weird side effects. And it's something that people think, oh, that'll never happen. But these things can happen. So that's why we do need more study and more caution around it, because it can be taken safely. There's heaps of people that take this for their arthritis and other conditions. But we don't want millions of people taking this just for the sake of it, particularly if it actually can increase the risk of death. So look, Trump said he's taking it with zinc as this preventive measure, but then this week the big news was that went missed by a lot of the mainstream, that the Trump administration is now discussing US nuclear tests for the first time in decades. So whether or not this is just another display of power between China, Russia, and some of their perceived enemies, or whether or not it is something else that Trump's a little bit paranoid from the medication, I think that's a bit of a long shot. But guys, my point is that with everything that's happening around the world today, there's any number of things that can accidentally cause things to boil over. So these days we've got deep fakes, maybe it's a side effect of a medication, maybe it's something else on Twitter, but times have changed and there's tension in the air, and that really calls for calmness, and I hope that the cool heads do prevail with everything that's happening at the moment. Another study out on remdesivir, that was the second promised drug. Again, it's just finding that it's only really helping those that are on oxygen and actually increased mortality for standalone treatment. So there's no real miracle drugs that we have found yet, and a few of the other studies out during the week in terms of vaccines weren't too promising either. So look, there's lots in development. I do think we are going to find something within a year, but I don't think it's as close as everyone keeps holding their breath for. Medical cannabis was the next one, where some scientists are saying that can help, particularly with the inflammatory side of things, because we are finding out that this can be more of a blood disease and an inflammation cascade, as well as the virus attacking your lungs and having difficulty breathing. So look, I'm all for these sort of trials. You guys know that I love seeing medicinal cannabis and similar drugs being taken seriously. All right, with all this happening and the, I guess, uncertainty, we've seen the US birth rate drop to a 35-year low. Now, this has happened in a number of countries. We just spoke about Japan and the demographics, and how in Australia, for example, we're really reliant on immigration and birth rates, and both are dropping. So that is one thing that is no longer a tailwind in terms of a growing population to grow your way out of these stagnant economies. 68% of unemployed US workers are now eligible for payments that are greater than their lost earnings. So we continue to hear this. A lot of people are now making more money and they don't want to go back to work. Maybe they're worried about the health concerns, or maybe they're just happy being paid more to be at home on the couch watching Netflix, as we saw some of those companies that are actually making more money. We'll get to the stock and the betting side of things in just a second as well, because that is something to worry about. So over in Europe, whoever's funding all this, obviously the government need to issue these bonds, and central banks then need to print the money to buy it. So we saw that Merkel and Macron are talking about another EU bailout, and these headlines, when people see these and read these, they get excited and they think, okay, I'm going to buy that bond because someone else is going to buy it off me. The government might pay a higher price. So the euro goes up, just like when everyone needs US dollars to buy US assets and US bonds. It's the same effect. So the euro went up a little bit. The yields go down, which means the price of the bond is going up. And again, that's just how things are working in this upside down world that we're currently living in. So the UK issued their first ever negative yielding bond. The reason that I thought that this was just so interesting was because central banks can't agree on something as basic as negative rates. So their main policy tool, basically now they're at zero and they're already printing unlimited money. The next thing is, well, do you go negative? Now, the Fed, the Bank of England and the RBA in Australia have always said that negative rates weren't an option. And Philip Lowe even came out very recently and said that they can be damaging. So they hurt people's confidence, they hurt savers, so they actually want to save more. And now we've got the Bank of England, 6 months later after they said this, coming out and saying that they work well and that they're going to consider negative rates. So which one is it? You're telling us that your models say one thing and then a few months later you turn around and say the opposite. And this is why there's just no confidence anymore in central bankers. They're wrong at every turn. Even Jerome Powell obviously saying negative rates aren't an option, but he's been wrong at every turn. He's talking about raising rates a year or so ago and, we're not going to cut next year, and they're cutting back to zero. So look, Trump has been more right than Powell, which is scary in itself. And coming into an election year, Trump wants negative rates. So despite what Powell and the Fed might want, markets are now pricing in negative rates and Trump wants them. And when everything starts tanking again, the Fed are going to cave and bend that knee and give markets what they want. So the Fed minutes actually show that Fed officials were mulling forward guidance, and they do see this battle. So tremendous human hardship ahead, and they're hinting at curve control. So yield curve control is basically saying we're going to buy whatever bonds at whatever date we need to keep interest rates low for longer. And this helps American mortgages. They're structured a bit differently than in Australia, but it really hurts the banks. And that's the other thing that negative interest rates do, and we've seen in Europe, and why I think Powell and Philip Lowe in Australia, why they don't want to go negative. Because banks are already very fragile, which we're about to talk all about. And if you go negative, you hurt them even more. And the last thing you want is a banking crisis, as well as a default and liquidity crisis with all these businesses going bust. So winners and losers in the New York luxury home apartment, that's about to reopen. And there's a lot of investors that we're hearing that are going to be putting these on the market. I don't think living in these big cities is going to be as attractive as we're hearing places like New Zealand and maybe even Tasmania accruing a premium value because people want to live places that aren't crowded, where you can go out in nature. I go for a walk in the park every day for an hour and there's no one in sight. Those sort of things are going to come at a premium. And there's a million millionaires in China. People are going to want to flee Hong Kong. They're going to want to go to somewhere that's politically neutral, good healthy food, water, protect their family, good education. So that's one part of the property story in Australia that's yet to play out. And it probably doesn't really favour Melbourne and Sydney if you think about it. Anyway, so let's continue on here. The Fed's $600 billion middle market, their Main Street lending facility, is a total disaster. This is something else I've been talking about. It's one thing to print that money and say, hey, this is for small, medium businesses and Main Street, but it's up to the banks and the lenders to actually give it out there to people that they're not worried about defaulting on it in 6 months' time, and for people to have the appetite to get it. And if those business owners are actually saying, you know what, I'm just going to collect my paycheck and not risk it, or I'm going to let my business fail, I don't think I want to open, I'm not going to take that risk and go into more debt and get a loan just because it's there. These are the kind of things that's happening. And it's not in the Fed's models. The game theory of all this and the real world intelligence, the street smarts that we often talk about in the business world, that is just what they're lacking just so much, and it's starting to show up now in the numbers. So the collapse will be visible. For lease and space available signs are starting to go up all over America. We're hearing stories of the largest malls defaulting on their last 2 loan payments. So all these different shop vacancies and people not paying their rent, that's starting to show through. Because these commercial mortgage-backed securities, this is, most of you have seen The Big Short, and you understand what happened in the financial crisis when we had all these mortgages. They get packaged up and they get sold off to investors because they love the yield. The same thing is now happening in the commercial real estate market and in the high yield market. And I've got a cracker whiteboard video that is out any day now, guys. I've got that all ready to go that's going to explain this really clearly. But that is the cascade of defaults that is worrying everyone from Australia through to the US. So somebody is dumping everything. A mystery investor has sold $333 million in a real estate ETF in a dark pool trade. So if you remember, a month or so ago, I did an interview with a team, Ren, that are doing dark pools trading on Ethereum and other chains. So a dark pool is when you don't want to know. You don't want other people to know that you're selling. So who you are or how much you're selling. So once again, these ETFs, these spider funds, where they're backed by these assets that are very difficult to actually sell off. So someone wants to get out early before the ETFs and these derivatives just start to cascade, and the actual underlying assets, a bit like the gold underneath an ETF, it becomes very hard for people to sell the actual real estate at the price that they're telling everyone it's worth. And I've got an interview on how this all works coming out this week with an Australian real estate broker who's on the front lines. And that is almost a whistleblower story that I think you guys are going to absolutely love. We're seeing those US commercial bank loan delinquency rates jump. So it's highly correlated with unemployment. And we know that unemployment's just had this huge jump up. Shadow Stats are reporting this at 20 or 30%. So we are expecting a lot more defaults and delinquencies there. And another interview that I'm so excited to tell you that I have booked this one as well. One of the rating agency employees, so these are the guys that say that that's AAA rated, it's safe, or no, that's junk. We can't rate that securely. Another whistleblower who was actually terminated. So he went and spoke to the Senate staff when they held a hearing, and he said, all these mischievous games that caused the GFC are happening again. And he actually got fired from the S&P and then the following weeks. So I can't wait to have him on. As always, I'll let you guys know and members what questions you want to ask beforehand in the group. But some of the guests we've had lately, it's just amazing. And thank you to everyone that does, share our videos, because without getting those network effects, we can't get these guests. So the US banks are on the hook for all these loans, $150 billion in frozen loans. We're waiting to see if they're going to be better when we get to September, when we've delayed all these loans too. And we've now got, I think it was 15 or 18 million Americans that are skipping their credit card and car loan payments. So in America, it's a little bit different where you can hand your keys in for your mortgage. In Australia, you've got that debt, you carry that with you. So look, different countries have different rules, but basically people are choosing not to pay their debts at the moment. Bond bubble insanity. So $1 trillion of investment grade bonds have been issued in 2020. $1.1 trillion in downgrades. So these companies are issuing to investors, and the investors are saying, you know what, we know it's risky, but we want that yield, and they're buying it, even though a lot of it now is being downgraded because of those rating agencies that are scrambling to say, oh, maybe that wasn't AAA, maybe that was a C-rated investment bond. So Herbalife selling $600 million in junk bonds to fund a stock buyback. This is how crazy things are getting. Robbing Peter to pay Paul. It's all a big circle. Keep them on the wheel. It's a big game that I've got to keep that rotating to prevent the house of cards collapsing. Auto registrations in Europe plunging 76% in April. So that's the largest drop on record. We know that people just aren't driving on holidays or hiring to drive around cities. Hertz filed for bankruptcy as the lockdowns have crushed the rental car industry. But just have a look at this chart. This shows you the number of Robinhood, which is a free trading app in America, the number of users that are holding this stock. So it's absolutely exploded since March, right as the stock has basically gone bust down towards $2 here. You can't quite see that behind me, but basically as the stock's fallen off a cliff and just as they've declared bankruptcy, there's a record number of retail investors that are going to be holding that stock. So that's the way it is at the moment. Completely bonkers. So a lot of these people that aren't, I guess, driving their car are buying bikes, or it's a new hobby. People want to cycle. Either way, bike sales are booming in the pandemic, and they're hitting their parks and getting out and about, getting some sunshine, some vitamin D, hopefully. But to every loser, there is a winner. And if people are getting these paychecks, they are spending money on the new bike, the new 70-inch TV. They're watching a lot of podcasts. They're watching their Netflix. This was huge news during the week about Joe Rogan going to Spotify. So he's dropping Apple and YouTube. We're going to see more of this. We know that there's been huge censorship on a lot of these platforms. Guys, I do post all my material to a number of platforms because of the way that we've had content get censored in the past, unfortunately. But cozying up there, I think Spotify are probably going to make far more than $100 million out of this deal. So both parties are pretty happy. And yeah, we are going to see more and more of these influencers make deals with other platforms because they're not happy with how they're being treated by the big tech giants. The world's most controversial oil frontier falls out of favor with the big banks. So the whiteboard video we did, we showed you how these explorers, these shale companies, these drillers, they've got to borrow money either from investors through shares or through debt markets issuing these junk bonds. And now they've fallen out of favor with all these big banks that don't want to take that risk. They haven't got that appetite. They're trying to shore up all their loan books. And so this is where they basically can't get their hands on any money. And we're going to see the energy companies become part of this cascade, this wave of defaults. So the Fed's balance sheet has already risen above $7 trillion. Bond ETF holdings, $1.8 trillion. Absolutely crazy. The amount of money that they're putting into just buying bond ETFs. $2.4 billion every hour. Think about that for a second. I tweeted a bit of a joke that that's the ultimate form of dollar cost averaging. But this is just money that's been printed out of thin air. Digitally printed, as Powell said in his recent interview. $2.4 billion every hour. And the total balance sheet of all the central banks now passing $20 trillion. So they're doing their best to stop that cascade of selling and keep the prices up. But at the end of the day, it doesn't really matter if the price on the screen is up if everything is defaulting and businesses aren't making money or employing people. So in other countries like Japan, they ran out of bonds to buy. We're seeing something similar happen in other countries now. So this was an article about what the Fed could buy, and their balance sheet could hit $130 trillion if Powell wanted to buy everything. So, we're talking stocks, residential real estate, then that commercial real estate, investment grade bonds, and then things like farmlands and leverage loans. Now, in Australia, the Victorian government came out and said we might buy $500 million worth of apartments to try and stop the housing prices going down. So this is just the craziness of how politicians are now thinking, who don't really understand finance or economics. They just think, we'll buy that and the price will go up and it'll be all rosy. Now, thankfully, the IMF chief has asked banks to halt all buybacks and dividends. If you're going to bail everyone out, I think you've just got to apply these rules. And it was disappointing in Australia where the banks cut their dividends back a bit, but they're still paying out dividends at a time when they don't have enough cash and they're getting bailouts, knocking back loans, trying to get up this capital, but yet still giving it out to investors. You just can't have it both ways, guys. And more and more countries are going to have to go down this path. Central banks have just created a freight market. It's a parallel universe, as you've heard me describe it over and over again. And Bank of America are now coming out and asking why anyone would expect stocks to trade rationally. It's just out the window these days. You've just got to get used to it. That's the way it is. And despite everything happening, you can actually look at certain indicators like Dan Tapiero says here. And it's incredible that the yield that you can now get on a stock compared to a bond, in theory, makes stocks the most attractive that they've been since back in the 1940s. Now, the yield isn't going to be there, okay? These companies that are paying out dividends, like the banks have had to cut back dividends or scrap them to some degree, like we just touched on. The energy companies that are paying out 7% dividends, that's going to be either not there or the company's going to go bust, okay? So yes, these yields are relatively attractive. Now the bonds are at record low interest rates or negative in some countries, but I wouldn't be reading too much into that. And maybe that's where a lot of investors are piling in. And when we look at the valuation of the SPY, it's now in the 100th percentile. So when we look at things like the EBITDA ratio, so earnings before tax and these traditional metrics, it's basically now the most overvalued it's been. And who's piling in? Google searches for buy stocks hitting those record levels back in March when people were getting those paychecks and they're at home on the couch in lockdown. Let's have a look at a few of these charts here from Sentiment Trader. This is the call option purchases, so buying calls, which means that people are betting that stocks are going to go up, hitting record highs. You can see back in 08 and 09, this is just eclipsing those levels. E-Trade and TD Ameritrade, the number of trades, so that's jumped fourfold just in the past few months. Number of Robinhood users holding the big indexes, so the US indexes, the tech indexes, for example, that's doubled as well in recent months. So that is the retail investors who are getting in. And when we have a look at metrics like why you should be worried, the huge amount of margin debt. So this is when I borrow stocks, I can do it on a margin. If I want to buy, say, $10,000 worth of stock, if I have a margin account, I'll only need $2,000 to buy $10,000 of stock. And we can see that the amount of margin loans now easily surpasses back in 2008 and during the dot-com bubble. So in red here, we can see those negative balances, and we want that to get back into the positive or at least neutral. So we don't want people being leveraged up. When we look at the price of stocks up here, a lot of that explains why, because people are just leveraged up and betting that it's going to continue to march higher. Now, when we see volume dropping and falling, 64% below the 3-month average, and during this whole bounce that you can see here on the S&P 500, volume has been declining, and that is not good. This is a typical sort of rising wedge or flag, whatever you want to call it, channel, but when we have that rising on decreasing volume, technically that is a pattern that almost always rolls over. So whether or not we get more intervention and, don't fight the Fed, this, that, and the other, but looking at the market internals, seeing things like the fact that insiders are selling, sales executives, more than $1 million filed yesterday. So look, retail piling in, insiders selling. The Fed have been tapering their purchases, but only because really the government have been issuing less treasuries lately. I think they're going to have to ramp that up to keep the stock market elevated and to keep funding these huge deficits of the government. And that's why Ray Dalio is saying things like the changing world, we're going to have a rotation in terms of the American empire, because you can't just continue on like this. Nothing is real anymore. They've got that reserve currency, but people are going to lose trust in it. And he's predicting things like, civil unrest. So of all people to come out and say that we need a fairer system, a fairer society, Jamie Dimon apparently. So I think I tweeted during the week that maybe he had a bit of a epiphany when he apparently had that emergency open heart surgery in March. And since then, JP Morgan have began doing the banking for Coinbase and Kraken. He's really done a 180 on calling Bitcoin a fraud, and he gets paid 500 times more than his average employee, and yet he's calling for a fairer society. So let me know what you guys think of that one in the comments below. But look, how on earth the US government and the Fed can justify buying $300 million a day of shares of just junk bond ETFs, let alone that $2.4 billion an hour of all those other goods, to bail out corporate America again, when we've got millions of citizens in the US and around the world really jobless, unable to afford food. We see those huge lines. Shelter, they can't afford their rent. Education, I think there's something like 1 in 5 children in the US are counted as living in poverty, not getting enough food. And then their healthcare system is, we hear so many bad stories compared to other places around the world. It's just so expensive. So all these things are happening, and yet we're buying $300 million a day in junk bond ETFs. Surely there is a better way to spend this money. And maybe enough people are never going to understand how this system works, because if they did, there would be a revolution in the morning, as Henry Ford said. So look, maybe the pitchforks are coming. Maybe they're not. Maybe the zombies are going to continue sleepwalking through life. But either way, guys, if all this money is getting printed, we know it's going to be good for precious metals. Silver played catch up big time this week. That ratio is still out there at its extremes. Marin Katusa has done some more research lately. He's got plenty of free stuff on his website, which I might link down below, as well as the premium newsletter with more stock picks. I know plenty of you guys are interested in which picks are out there. We did put out our precious metals report, Is the Time Right for Silver, talking all about the good and the bad. So I don't want to, just present the bullish case. I want to be honest with you guys and tell you all the data and where I actually think that silver is going, and how the miners work versus the ETFs, the industrial side of silver, as well as the bullish case. So that was a 13-page report, one of my favorites yet, and that is in our group, guys. If you click on the units, you can get access to all the member-only reports there. One thing I just wanted to mention to wrap up was the retail investors that are piling in to all these ETFs. And sure enough, it's like clockwork. They hear about gold going up and they think, instead of just buying some gold, or maybe they buy the gold ETF, or the miners if they're happy with that, the junior miners if they want to be a little bit more risky. But instead, they pile into the 2 times leverage, or the 2 times leverage junior ETF. See, that's had 2,100% more investors buy it just from March to April. Now, I've done videos on why I don't like leverage products. They decay. You lose out if you hold them over time. And there's 32 times more investors now holding this double leveraged than just the junior index itself. So even if that trader has the right assumption and gold goes up and the miners go up in price, for example, they can still lose money because of the volatility and the decay and the way these things work. So I've done a video on that, again, for members in the learning units, about why I don't like leverage tokens and products. But just be careful, guys, because look, I do like trading these products. There's some of them that I would be happy to own and hold, and you can get exposure to these on a number of platforms, but I am glad that eToro doesn't offer those double leverage, the funky ones, because I think that's where a lot of people do get into trouble. So look, I've said this time and time again. Yes, there's a lot of good promotions going around and whatnot, but now's not the time to be trading if you're a beginner. Take advantage of the practice account and just get a feel for all this. You're going to lose money. And when I look at all the data about what's happening there, I think you guys start to get a pretty clear picture that retail traders often do the wrong thing at the wrong time. And I don't think they're on the right side of this trade either. So quick drink. Most of you know that I do these in one take, and sometimes talking for 45 minutes I get a little bit dry, so sorry about that. Let's get into more of the crypto news. And as I say at the start of these episodes, there is just so much overlap between the crypto world and the traditional world these days. And this paper that was put out by the Federal Reserve Bank of Chicago, I think this got largely missed by the crypto community and investing community. This was all about the monetary and fiscal policies, so the central bank and the government working together in times of large debt. And this paragraph here should really scare you, talking about creating controlled and temporary inflation. Now, where have we heard those words before? When they started printing money and dropping interest rates to zero. So nothing that they do, they can ever unwind. So once they start trying to create inflation, they're not going to get controlled and temporary, trying to gradually erode the debts. That's their plan now that the debts are just so big. Basically, what I'm saying here is that I don't think it is going to work out. Their plans never do. So please be cautious with this stuff happening. You need to understand how to protect yourself if we do get inflation. And that is something that obviously I'll continue to talk about in the group, what I'm doing, and give you guys the best research and papers and things to read. So Trump came out on Twitter. He's been at power constantly, and he's saying that you need to do more to Powell and the Fed. Now, Powell's out on 60 Minutes on a Sunday night saying that we want the government to do more and spend more and get that fiscal support going. Now, US debt's $25 trillion, Fed balance sheet at a record high. Both have promised unlimited support, so it's kind of a joke now. It doesn't really matter who prints the money. Control P, as I was sort of joking here. Money printer go brr. Why does it matter who prints that money these days? It's just all this big game, and that's what people are sort of finally realizing, that none of this is real. Money isn't real. So you've got legends like Robert Kiyosaki coming out and talking about buy gold, buy silver, buy Bitcoin. $75,000 in 3 years is his prediction. Last week it was Paul Tudor Jones. We've got Goldman Sachs, of all people. I couldn't believe it when I saw this. They've got a client call about Bitcoin and gold and the coming inflation. This is nuts that the big boys are talking about Bitcoin like it's a legitimate asset class. So you've got all these billionaires now that admit to owning some Bitcoin. I think it's just going to get that real momentum behind it once all the celebs start tweeting about it. It's going up in price and it's cool. But more importantly, it's this digital thick shake theory that I've been talking about. Digital currencies could threaten US geopolitical power, warns JP Morgan. So all of a sudden, they're almost warming to the crypto side of things, and they're warning the government now that they're in the crypto sphere. They've got their JP Morgan coin and cozying up to a few of the exchanges. And this is the geopolitical nature of it. So China have got a lot of the Bitcoin mining. We've now got Iran calling for a national crypto mining strategy. So they want to start mining these coins. Finally, US lawmakers are proposing some groundwork legislation to try and get a national blockchain strategy like we've got in Australia, like Iran are planning. So they're behind the 8 ball and they want to catch up. That's why we've seen someone like former Coinbase lawyer is now acting head of US bank regulator. So they're getting the right, pawns in place in this global chess game that is happening in the distributed ledger in the crypto space, which is crazy to think about. So in terms of regulation in the US, BitMEX are facing another lawsuit now. There's talk that 20% of their users were from the US, even though they're not really allowed to. And they've named a lot of the actual influencers and YouTubers who were from the US, but were pushing their BitMEX affiliate link and doing videos on BitMEX. So look, that's playing with fire, but also these charges of laundering and wire fraud. So look, I'm sure they're going to fight it. I'm sure they've got lawyers with deep pockets. They're outside the US. Tether have been through this. They never seem to really get anywhere with these lawsuits, but we'll see what happens. Either way, the good news is that FTX have now launched in the US. So you've got a trading platform that you guys know that I love. I swear by it. They're running a bonus at the moment, so you can get up to $50 for the first 500 people that sign up to the ftx.us. And I have got that link over on Twitter. I might put that in the description below as well, because that does get you guys a discount on fees. Coinbase have added FTX's token to their list of custody tokens. So Coinbase giving something the tick of approval can really get it going, which we're going to see in a second with Amisa Go during the week. But look, I really do, guys, put my support behind them because of how innovative they've been. And look, we went in that ICO at 80 cents and it's now over $3. So another big winner for us. That's up a few 100%. And I know plenty of you members got that one as well. Their new monthly burn report is out. So they continue to burn 1% of those fees generated. Insurance funds. Look, good token mechanics, very similar to Binance BNB token, which most of you are familiar with. To continue on with this talk of US dollar stable coins and the race to get this digital currency up, the number of Tether transfers is at an all-time high. A lot of this is happening on Ethereum. This has certainly put strain on the Ethereum blockchain, and the Bitcoin blockchain's fairly full at the moment, but up 560% just since January in terms of those Tether transfers. So look, this is a system that is superior to the legacy banks. France have announced that they have successfully tested a digital euro. It is coming to every country. The decentralized models are out there as well, and they are working. I've done a number of tutorials about this, but guys, if you've got the Maker, the DAI stablecoin, you will need to upgrade that. If you've got the old version, the single collateral DAI, just go to this website, migrate.makerdao.com, and connect your MetaMask account or your hardware wallet. Click on upgrade. It's so easy to do. I think it's already picked up my account there, guys. I had $5 in that MetaMask account, and yeah, you honestly just click a couple of buttons and it's very easy to upgrade there. Other mobile wallets that have come out that are just going to make this crypto world as easy as a bank. So the Argent wallet, have a play around with that if you haven't already. You can muck around with all the different apps. So Kyber, the pulled together lottery, lending, the token sets, which plenty of you are asking me about with the strategies. So you can do that all in a mobile wallet. And this is Web3 that you keep hearing about. This is what Ethereum is building, a new internet from the ground up. dbank.com was another cool one that someone recommended to me this week. So you go to these websites, but they're just an interface for you to interact with the Ethereum world. So any project that you've heard about that fully decentralized, they can just integrate it with your wallet and your app, and you can do all your banking and get your interest rates, do it all from the comfort of your hardware wallet or your phone. So it's really cool for me to watch this happen so easily. And this is what I was talking about specifically in my digital thick shake theory, where it's just going to become so much easier for someone to get interest and send a token rather than actual dollar through the traditional banking system. It's quicker, it's easier, it's cheaper. That technology always wins out over time. The Winklevoss twins have said that the stablecoin race hasn't even begun, so it won't get there till Wall Street embraces DeFi. Maybe JP Morgan know that, hey, if we can set up DeFi accounts and offer our clients 8%, that's far better than 0% or negative rates if the Fed go negative. So the banks are trying to make themselves relevant, like the old quote going, they laugh at you and they fight you and then they join you, and maybe they're seeing the golden side to all this. Now, obviously, I'm preferred if you guys could all become your own bank and have a hardware wallet. We've added more of those free modules over on the website. How to use your Ledger Live. I've done the full rundowns and tutorials on how to set up your Ledger and use Ledger Live. I know it can be difficult. So look, we'll continue to do this education. If you're going to be your own bank, you've got to have two-factor. So friends and family asking these questions. If you're a beginner, head over to the website, guys. This is all free. Make sure you know how to become your own bank safely. A Coldplay star. So this was the bass guitarist, I think. So Guy Berryman. Look, he's backing another Bitcoin app. So he wants to make it user-friendly for the masses. It is just coming. That storm is building. If you do want to invest in this in your super, it is possible with New Brighton Capital. So these guys are the leaders in Australia in their knowledge of how to help you set up securely and safely crypto, gold and silver, as well as your other traditional assets. So free consultation. Use that link down below. Mike and the team will help you out. For members, we've got a even bigger discount. It's in the discount section in the group. For everyone else, you guys still get a discount as well, but plenty of interest, and I know plenty of you that have been dollar cost averaging into your super. You're thinking about Bitcoin, Ethereum for the next 10 years or so. I think that is the way to do it, and that's how I was doing it when I was tweeting about buying some $4,000 for my super on that dip, on the sell-off we got a few weeks ago. So the Kyber network has tripled $100 million despite the coronavirus recession. So fundamentals doing their own thing. Nothing makes me happier. The fastest growing project. This was one of the tokens that I got right behind. And for members, you guys know that we got into this one very early on. I think it's now up 500%. I haven't checked this week, but nothing is better than doing this fundamental research and watching all these cool DeFi projects come out the other side. Uniswap have launched version 2. More pairs, another great trading service. You can do flash loans, a range of things there. UMA was an interesting one where, again, you can create synthetic assets to try and trade anything. One of the first assets they've got here is Ethereum up against Bitcoin. So you can trade that relationship in a decentralized fashion, which a lot of you are very interested in as well. So in the future, you'll be able to create anything you want. I guess you can think of it as matching any two assets and trading that price. So very cool there. Check out the website. I might do a tutorial and talk about them more in our monthly Ethereum update. $4 million of DAI from Wrapped Bitcoin and why it matters. So in recent weeks, we've had a number of different projects that are putting Bitcoin in ERC20 format. So you can use it in Ethereum in all these different apps and have it as collateral. So that's why this is so important. It's bringing a bigger market cap of more that's possible onto Ethereum from Bitcoin. Now, not all of them have gone smoothly. We did have T Bitcoin have to shut down after a couple of days. They did have a bit of a bug there as well. So that was the Keep network. I'm sure they'll fix that up. Ren Bitcoin is another one. We spoke about Ren and the dark pools in the start of this episode. So they've gone live on mainnet on Ethereum. And because of all these new apps, we've got synthetics as well. They've got their synthetic Bitcoin. We've now got more Bitcoin in layer 2. So more Bitcoin on Ethereum than Bitcoin on the Lightning Network, which is a kind of funny stat that I know the Bitcoin maximalists hate it when I say that. Don't hit the downvote just because of that, guys. All right, a few other cool little apps that I just want to mention quickly. Opium.team. So you guys know that I love options. These guys are bringing out decentralized options and a range of other trading products, futures contracts. So I spoke to them during the week and I just love being able to reach out to all these projects. And I suggested that, look, I want options on Ethereum. I want to be able to buy some calls or sell some puts and hedge my portfolio all from my Ledger hardware wallet, being my own bank. And they said, yep, no worries, we can spin that up. And within a few days, they had that. So very cool stuff. Shout out to Opium Network. I only recently found them this week, and it's just awesome that you guys are being able to create those derivatives. And look, I want to have them on the channel because I want to hear more about what they have planned doing. It's very, very cool that they can spin that up so quickly. Samsung Galaxy, their phone is bringing crypto to esports streamers, and the Theta token. So Theta's been on fire. This is one that wants to reward content creators. The T-Fuel is the token you get paid for renting out your hardware to stream. Again, I do want to have these guys on the team. Plenty of you have been asking for that, so I'm going to tee that up and have them on for a full podcast. So well done to everyone that got into Theta. That is one of the best performers in recent weeks. Another one that's up 500% since March. This is another one that we got behind. Last year, actually, we covered this when it was 4 cents after a DevCon. I can't remember what it hit recently, but I think it's up 1,000% since that initial call. Edgen's path to 100 million users. This was an interview I did last week. For members, that is up. It's in the group. You guys get the link. I'm going to make this public possibly tomorrow night because I've got a feeling that a lot of the stuff they've been working on is going to start to get spoken about more during the next few days. And as always, I want to get you guys those unique insights before everyone else piles in and we get that FOMO, okay? So look, if you haven't listened to that interview, try and listen to it if you can, because I've just got a feeling that a lot of the stuff that they've been working on with some of their plugins and partners and the virtual worlds that Simon and I spoke about, that's all coming together, and it's probably going to get more mainstream coverage. These things tend to take a little bit of time for everyone else to pick up on. Sentiment, these guys have been helping us. We partner with them. I love Sentiment. I love crypto research. This was a report they put out on April 4. One of two reports. This was a free one, so you can head over to their website and check out all their free research. The busiest ERC20 tokens. So who has been doing the most development? And you can see that list there of ones that I own. Just about half of those are in my portfolio personally. Amisego was number 8 on that list in terms of development, when a lot of people thought it was dev. Now, for that reason, I put out a post in our group on April 4th and said, guys, check out these two research reports, particularly the premium one. So on their premium research report, Amisego was the number one asset to go long based on MVRV, which is the mean value to realized value. So basically saying that there's been a lot of good development going on. This one isn't receiving a lot of attention. It's under the radar. We think it's got minimum downside risk. The interview that I did with them last week as well got me confident that they are going to be launching that mainnet, and the beta is going really well. So when others thought Amisego was dead, you look for these assets that are trading under fair value, and this is where I put out that post for members at 50 cents. And this week it hit $2.20, and on Coinbase it actually hit $7, which is insane, guys. So if you got that at 50 cents to $7, and well done if you sold there. I certainly wasn't that lucky, and this is one that I actually want to hold, because when they launch their mainnet, they're going to have staking, and it's these tokens where you get the staking and the rewards, which people are just absolutely loving, and I think it's going to come back in favor. Now, it's got a long way to go. I was certainly one, and I'll admit this, that I bought a lot of Amisego at $6, and I've been able to average down because I do believe in those projects, and I will average down if there's something I believe in. But getting down to 50 cents was pretty incredible, and we can see that there's still a lot of token holders that bought at these higher prices. But look, I think these people are going to be a lot happier that they know that the mainnet is coming and that they can stake and earn a reward from holding a lot of those tokens. Now, final few pieces of Ethereum news. We had the donuts on the Ethereum subreddit. They absolutely mooned in price when they announced that they were cutting down that supply. Now, if anyone can help me out from Ethereum Reddit, I had hundreds of thousands of these, and I didn't upgrade in time, and apparently they're missing. So look, that sucks a little bit if anyone can help me out. But the actual Reddit platform itself have launched their own token for all their subreddits because of how well I think the donuts did it on the Ethereum subreddit. But look, 10,000 Fortnite users have been introduced. We've got a number of these platforms now experimenting with these tokens to reward users. So it's all happening on Ethereum. Really cool stuff. But this is what I want to get to, the dangers of centralization and exchanges holding a lot of these tokens and doing a lot of the staking. So Binance have turned their back on the Steam community, or on the Steam rebels, sorry, and they've backed Justin Sun's hard fork. So there's been these account freezes since Justin Sun acquired the Steam network, and then the Steam community hard forked it and created Hive. And now they're freezing some of these accounts and saying, no, you're not allowed to get your Steam. And look, Binance, CZ's come out and said his side of things, saying that they're in a hard position and they've kind of got to support the upgrade. Look, I'm not going to have too much to say about that. But what I do want to say is that it really has shown about, well, what is decentralization? And a lot of people tell me that their project's decentralized and, oh, look, they froze at that account in the past, or they did that or the other. It's not anymore. But look, anytime the vast majority of power, tokens, staking, voting, or influence is in the hands of exchanges or businesses or an individual even on Twitter like Justin with a lot of power, it can be altered or shut down, and that is not decentralized, and there's very few projects that are truly decentralized. I'm not going to name any names because people will get upset, but look, other than your Bitcoin and Ethereum that have got your 10,000 nodes, there's a lot of projects that are a lot smaller and do risk these things happening. So just something to be aware of, and that's sometimes a trade-off that's worth making. Not all projects have to be decentralized. There's some that are fine to be more centralized because you need better speed, scalability. Now, EOS has come under fire again. Block One will be voting for EOS candidates, but they want to know their locations first, their IP addresses, and who they are. So again, that's not really private or decentralized. Doesn't matter. You might not care. But Block One have really failed to decentralize EOS, and that is the arguments being made in a new securities fraud lawsuit. And look, when I see someone like the guys in Australia from EOS that wanted to be a block producer, and then we've got all these Chinese exchanges and whales that are getting paid all the EOS that aren't really doing anything development-wise for the community. I think that's what's upset a lot of people, probably the people behind these sort of lawsuits. And governance remains a challenge for all blockchains. But look, this is where I want to get to and be, just honest with you guys and always try and be neutral and unbiased, because yes, I do love Ethereum and I think they're the leader, but exchanges are holding more ETH than ever. And some people are saying that this is threatening ETH's price and there's a dump coming, because with Bitcoin, they're holding less Bitcoin than ever on exchanges because everyone's sent it off and they're hodling. But what I think people are missing is the fact that proof of stake is coming and the testnet's already got 1 million ETH in it. A lot of these exchanges are going to want to stake ETH, and they're going to offer that, just like Binance offer the staking for all these other coins, and Coinbase have got on board. That is the danger, but we don't want that to end up happening. Now, thankfully, the Ethereum world's already got something like 10,000 nodes staking on the testnets. So it doesn't look like that's going to be a problem. But for these other coins, or if everyone just has their coins on exchange or on Amazon Web Services running a node, that's not decentralized, guys. We actually need people to do it on their own computer. It's going to be easy to do. I'm going to run you through how to do that. And for members, I think we're even looking at possibly doing like a Nuggets News decentralized rocket pool or something like that. But either way, I will walk you through how to do all that when the time's right. And we must remember that we can make these arguments. We hear them about the large Chinese mining pools controlling hash rate. Again, the reality is that I can connect to a Chinese mining pool from anywhere around the world, and that doesn't mean that my hash rate is actually in China or gives them any more power necessarily. We can change at a flick of a switch. So last piece of news, it has been 10 years since Pizza Day, when Laszlo famously bought 2 pizzas for 10,000 Bitcoin, and that would now be worth $91 million. He doesn't regret a thing. I think it's great. It was the first time that Bitcoin had been given a monetary value. And without that bit of history, it might have taken a year or two longer to get its first value and start its uptrend. So look, guys, everything happens for a reason in this universe. Let's get into price. Speaking about that now, we'll bring up my chart. We're just going to have a quick look at the weekly chart on Bitcoin, starting on those high time frames. And we are just so close to this level around 10,000, where we want to get that higher high after being on this downtrend where we keep making these new lower lows and lower highs. And once we can get over here, I think it's very exciting. Now, different people have this trend line drawn slightly differently. And if you want to draw it from, these couple of weeks and say that, look, that works out a bit better for you. Some people have got it on their log chart, some people don't. So look, TA is a science on art, and that's why some people in the comments say it's reading tea leaves and whatnot. But look, what you need to know is that once we get over this, the number of people that are looking at all the different TA styles. So just quickly, guys, I might drag this over. I think you can see that nice and clearly now. This is the different, styles a lot of people use. So some people are watching an uptrend on Bitcoin. And once again, you can draw this slightly differently, and you can make the argument we've lost the uptrend and we're now testing it before we're going to fail again. Other people are happy that we're still bouncing off this line with multiple touch points that are still valid. But look, when we look at things like the moving averages, we're still above everything from the exponential, the lower time frame, your 10s and your 20s. This is 12 and 26 at the moment, all the way through the high time frame stuff. So your 50, 100, 200 moving average. We're still above all of these. We're above the guppy that some people like. And we're still perfectly healthy in terms of our Bollinger Bands on the daily there. Let's just quickly check out the weekly on the Bollingers. So just having a little rest. There's more room to run if we wanted to continue higher. So basically, if we are in a bull market, there's plenty of room to go to the upside. It's been an incredible run. It hasn't really given people a chance to buy in. When we look at Ethereum, let's just get rid of that, sorry guys, and go back to our solo chart. When you look at Ethereum, it has outperformed recently in terms of its percentage moves from that capitulation. This one little week of pullback since we hit that resistance zone, resetting, and I think we are getting ready for another leg higher. If this is the big if we can break the correlation from the stock market. So at the moment, everything's been charging higher, oil, gold, including these markets. But once again, we're just sitting right in this golden zone level, this 61.8% retracement. We've sort of hit it a couple of times. You can see this downtrend, this big head and shoulders, you can argue, or cup and handle. Some people saying that, look, we've come back, we've broken through, and we're testing it, and we're about to rocket higher. Other people saying that this is a failure and a rejection. So look, the point is that we've got a real tussle between the bulls and the bears, between the Fed and investors on Wall Street. No one is really clear on what happens next and if things get nasty or if we've recovered. And that's where I think it's actually really healthy, particularly for crypto, because we're not in a euphoria where everyone's bullish. We've got new people coming into the market, a healthy dose of skepticism, big institutions talking about crypto. For me, it is just all that matter of time where we need to take a deep breath, zoom out, keep an eye on the weekly and the monthly time frames. Let's put that on the log chart there, guys, and keep this super cycle in the back of our heads, because I think we are definitely heading for good times ahead. So guys, head over to nuggetsnews.com.au if you want to get any of that free research or our premium group. I want to see you in there today and becoming part of the Nuggets News family. If you want to go further down the rabbit hole and get up to date with all my daily posts. So guys, I hope you've enjoyed that video. Please hit that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.